Hey guys,
Hi, Scott.
Morning,
Scott.
Let's go.
how are we all today?
Good.
Really good, thank you.
I had the first day of trading yesterday that I actually enjoyed it in a couple of weeks. So it was like, I don't know, I kind of felt like things were turning from bad to good. So kind of happy with that. Shall we do the baseline queries first, or do we want to do it in the opposite order? Any questions first? Okay, let's do some baseline queries. Anthony, 7th of September, 316, retest variation buy on baseline. Is this high and tight? 7th of September, 316. Let me find it. Okay, where are we? 3. 316, where are we? Here, let's check. That's probably a good one to check. So it looks high and tight, but I didn't check it. So let's double check it. Obviously, highest high in 25 bars is probably here. May not be. The high is, the entry is 29 and the stop loss is 24. So that's 5 for 5.5, 29 and 5.5 is 34.5. Sorry. 29 and 5.5 is 34.5, correct? Yeah, that's not high and tight. You're correct. Let me delete that from the baseline. September 316. That sucks because that's a nice trade. That's the kind of trade you would take if you had discretion. Okay, 8th of September 622. Let's do 622. Where are we? We are trending down. Lowest close in the trend is 794. Lowest close in the trend is 785. It doesn't touch the EMA, which is 719, and the high is 716. But we are in decreasing volume mode. Decreasing volume mode. Still in decreasing volume mode at 624. 622. 622, 624, same setup. Yes, absolutely correct. Let me add this one in now. Confirming evidence. What do we got? So we're looking here. Is this a close outside the Bollinger? 874, 87. Whoa, the close is 874 and the Bollinger is 877. So no, this is not walking down the Bollinger, but oh look, decreasing vol. And this one is walking down the Bollinger. So yes, this is good trade. Let me put this in. One point 17875, 1.17915. Right. Okay, so that one is good. Thank you, Anthony. Okay, so he's got some notes about this. Good one to analyze as a group. 622 doesn't fill until this bar. So what happens here is the low is 78. The low is 88 pips. So the entry point is 77.5. Here, the low is it broke the low but didn't fill. So the entry point is the same, so you leave it. So where does the stop loss go? That's an interesting question. So logically, the stop loss should go at the high of this candle, which is slightly higher than that candle. But back in the real world, you probably don't have time to cancel your order. So the way that I personally handle these is I leave the order the same. I don't want to risk taking the order off and putting it back on. And then when it fills, then I'll adjust it up to the high of the candle. So what that does is, in effect, it gives me the potential to have a slightly greater than 1 hour loss. But what it doesn't do is give me the possibility of missing out on my fill. So you can see here, the entry point would be 87.5 to 91 is 2.5 size for 3. Here, the size is actually 3, so we're sizing it for 3 anyway, so there's no difference. So what you would do is let the order fill. As soon as it fills, you would see it like you would see the stop loss here, and then just drag it up a little bit.
Right. Yep, no worries.
Is that how you guys?
I think that was the day we had the live call, but we had no trades. Remember? And then after we finished the live call, we had
a couple of winners after we stopped.
And I remember Chris W saying that he had 3 in the space of a short period of time, and I only had 2. I went back and looked at it, and I went, "Oh shit! There was 2 shooting stars there, sort of 4 minutes apart." But what you're saying makes sense now. I just thought, oh, okay. He's got 1 winner off the 622, and then he's got his second winner off the 630. But yeah, what you're saying makes total sense. That the lower that 622 is 88, which means 87.5 is the entry, which means you don't get filled on 624 because it's 87.6.
Yes, it's one of those tricky ones.
Yeah. So I got 1 out of those 2, and I was a bit remorseful. I perhaps missed one, but obviously I haven't, so it's good.
And then from memory, this one wasn't a setup, right? We were still in decreasing vol for this long, right?
Yeah, it was these 2 shooting stars, 622 and then 630.
Okay, so
I thought 622 hit target at 628, which then gave you the opportunity to enter again on 630. But
okay, so for the guys watching this who might not be understanding, we've got a setup here and we've got another setup a few bars later. We can't take both unless this one has hit the profit here. So let's look at it. So the entry point is 87.5. The stop loss is 91.5. So that's 4 for 4.5. So 87.5 less 4.5 is 83. The low here is 83.4. Oh, hang on. That's not right. That's not right. Because we're placing the order based on this bar.
And I think that's where I said it'd be a good one to talk
I
through,
see.
because I think one was 3 for 3.5.
One was
but
3
then,
for 3.5, and then we banged it and then gone again.
Yeah, and you don't have to cancel your order, but the next shooting star, so you got a shooting star at 622, you got one at 624, but the 624 is a longer range. So in a absolute perfect world, you would go, well, I need to make my order a different size and a different target, because I'd be putting the stop loss behind the 624, not 622. But then we've had chats in the past where we sort of say, well,
so this is a very interesting question. So you would have placed this order for 3 pip stop, 3.5 pip target, which would have hit here. But personally, I would have seen that fill with a high above here, and I would have moved this up, and I would have moved the target down. So
okay.
the way I do it, I would have missed out and not taken this,
Right.
Which is probably slightly incorrect, but that's the way that I would do it, because I just don't want to make mistakes.
Yep. That's why I thought it'd be a good one to talk through.
Really good one to talk through. Thank you. Okay. 654 RTC sell occurs before 702. 654. Oh, so it is. Okay. So I had this down as a setup, but it actually is a setup here, because this is a shooting star. It just doesn't look like a shooting star. So the correct entry is here. It hits the target a little bit before. This one hit the target here, but this one will hit the target probably here, neatly indicating the advantage of the retest concept. Okay, so that's a yes. Okay, 4th of September, mentioned before about DV, 4th of September, 504. Okay, so we're in decreasing vola from here. What takes us out of decreasing vola is pivot too high, or the highest ATR value in the trend, which is here. So this bar takes us out of decreasing vola. And which bar are we looking at? 504. So this bar takes us out of decreasing vola, and this is the highest close in the trend. And no, we don't get put back in decreasing vola. So that's a no. Everyone agree? Steve, you on the call? Okay. Anyone disagree?
Yes, I'm on the call. Scott.
Hey, Steve, how are you, man?
Thank you.
I'm not quite sure what you meant. So here, this is the highest ATR value in the trend. So this is the benchmark that gets us out. So we've just
might be a different Steve.
Sorry?
Might be a different Steve.
Yeah. Okay. He's a different. I thought it was Steve Spray. Yeah, I think I'm right here. Okay, moving on. 9th of September, 650. Let's have a look. Right, 650. That was really tricky. Okay, so we had a long at 642 from memory. No, decreasing vola. We're in decreasing vola from here, and therefore we have a shooting star. We did not have confirming evidence on one of these. Let's have a look. confirming evidence, 5 and 10. Okay, so the low here is 7552 and the low here is 7551. So the entry point is the same and the low here is here. So we have entry. Do we have confirming evidence? Lowest close in the trend on a downtick. Okay, we do have confirming evidence on the 5 and we do have confirming evidence on the 10. Absolutely correct. Good one, Anthony. And
So that's the same patch of price action, just a shooting star 3 candles later that goes on to profit.
Okay, so we have one winner and one loser. Oh, okay, now this is really interesting. So immediately here we have a loser and then another win and then another trade 2 minutes later, which you'd feel like an idiot taking, and it was a winner. So
and the second one I had trending and decreasing vola is confirming, but you're probably still in DV on the 5. But if you look them in the order that you go looking for confirming trendings there.
all right, very interesting. Yes and yes. And what else have we got?
Sorry, Matt. I'll take a week off next week from baseline queries. Sorry.
No, it's good, man. I mean, without you guys doing this for me, I would have to take like 3 times as long doing it. Like I can do it in a fairly shoddy manner and be pretty sure that you guys are going to catch it all. So, RTV long 526, not on baseline. Let's look at it. Does this touch? And we're trending up, so we don't worry about decreasing vola down. This one here, 526. So the entry point is 32.5. The stop loss is 28.5. So that's 4 for 4.5. So 32.5 and 4.5 is 37, and that brings us to there. Definitely good trade and winning trade. It's the target here. No, here. Good trade.
On that one, Scott, on the surface, when you're looking at the chart from a distance, 514 looks like it touches the Bollinger. So then 516 makes a lower low and a lower close on a downtick. So you would think, oh, we're in DV. But when you really zero in on it, 514 doesn't touch the lower Bollinger, so you can't be trending, so you can't be in DV. So it's a really sort of technical one, but it's it fits the rules.
And, sometimes the rules work out for us and sometimes the rules don't.
Well, that's true because you look at the price action and it's a sideways. It's not a trend. Do you know what I mean? Like it had that touched, you would skip it because of the rules. But essentially, looking at the price action, it's sort of high volatility sideways, really, isn't it?
Mm-hmm. Okay, 644. 632. Where are we looking?
I wasn't sure about this one, so this is more a question for my own learning rather than
644 Euro USD. Where is 644? Okay, so you're right. So this is one of those rule artifacts ones. So if we're still in decreasing vola up, this technically fits the rules, right?
Yeah.
Okay. So we go into decreasing vola here. We come out of it here. We come out of it the bar after this entry here, which we skip. So we're out. and so we're not in decreasing volatility. So this is not. So this is not a trade.
Right.
We're clear.
Yeah, and I think it is on the baseline as a trade.
Should.
And I wasn't sure that it should be, but I wasn't 100%. That's why I wanted to go through it today.
No, it's not a trade.
So Scott, that was in at 6:04 and out at 6:10.
In DV, Julian?
Yeah.
Yeah. It's there, out here. Stand exactly so, Julian.
Good, great, thank you.
Yeah, that should not be in the baseline, and that is September 6:44. Wow, that doesn't seem like the sort of thing that I would put in. Wow. Okay, yeah, that's my bad. Okay, guys, that's excellent. Who wants to go first today?
I've got two questions, if it's okay.
Sure, please.
Anyway, how you going?
I'm good, Jason.
That's the way. Yeah, I'm starting to enjoy the course now, mate. It's starting to come together, so it's really good. I just got one query just in regards to the DV, and because I'm using that coloured tick, tells you when you're going into it or not. So the thing that I want to know is it at the bottom of that tick that becomes the new high, that if we go above, it's out of DV, or is it at the top of that tick that just was made?
Do you want to share your screen and show me something?
I've got nothing to show you, to be honest.
Okay.
Yeah, so basically, if I can put it this way, like just say there was a line going across and that's black. Anything below it is red, anything above it is green. So when it goes into DV, it'll go red. So at the bottom of that...
Bring the indicator up and I'll...
yeah.
Holy Grail, which one is it?
Yeah, that's the highlight, I think. Up and down, tick highlight.
There we go. This is the one you're using?
Yes, mate. Okay, yeah, so just say... okay.
Okay, so it's like this. You don't check this all the time.
No.
The way to do it is that you only check this. I'll find a bit of price action. You only check it every time you make the highest close in the trend. So the way to get yourself into the habit, so you never mix it, so you never miss it, is say, okay, let me find a trend. Okay, we're trending up from this bar.
Mm-hmm.
So every time you make the highest close in the trend, say to yourself, oh, highest close in the trend. And then I say, is it on an uptick or a downtick? And then I actually say out loud, uptick, because it's green. Highest close in the trend, got to check again, uptick. Highest close in the trend, uptick. Highest close in the trend, oh, it's red, downtick. So now I'm in decreasing vol.
That's the bit that I'm, yeah. So is it the bottom of that red one that becomes the new high, and if we go above it, we're out? Or is it the top of that red one that we wait to go?
So that depends on where we are in the trend. So there's two things that, let me show you. There's two things that throw us out of decreasing volatility mode. The first thing is making the highest ATR value in the trend, which for here is right here.
Okay.
The second thing is making a pivot too high. Now, a pivot too high is a high in ATR with two lower bars to the left of it and two lower bars to the right of it. So in this instance, this pivot too high is also the highest ATR value in the trend. So we pop out of decreasing volatility at this bar.
Lovely. Perfect. Oh, that's nailed on the head for me. So thank you so much for that.
How about we just go through one more example of that? I want to get that really clear for you.
Okay, cool.
Okay. So we start trending up. Trending up is a two-stage process. Stage one, we touch the upper Bollinger. Stage two, we have a single bar with a higher high and a higher close. We've done that on a downtick in ATR. You can see this is a downtick.
Lovely.
So now we're in decreasing volatility. What throws us out of decreasing volatility? Breaking this, which is the highest ATR value in the trend. Just remember, we weren't trending here. We're only trending from this bar. So in this instance, you're almost guaranteed to be out of ATR, out of DV within a couple of bars. And
perfect. All right, great. Well, I'll become a professional now. I don't know that one.
All right.
Yeah.
That's
The only
That's
other thing was with this other thing that you got that shows the hammers and the shooting stars.
yeah.
Most of the time, it shows like a doji being a shooting star. And I just noticed today that you're taking those. So are you
Okay,
taking?
So the shooting star definition is it has to close in the bottom half of the range. So sometimes you'll get something like this, which is a doji, but if you run the math on it, it's actually closing very slightly in the bottom half of the range. So like this one here, that's a shitty looking doji, but it's closed in the bottom half of the range, so it's definitely a shooting star. So the definition of shooting star is it has to have an upper wick at least equal to or greater than 2 times the real body, which is the black bit, and it has to have a close in the lower half of the range. So a doji with a close in the lower half of the range will trigger it. Yeah, you could. Some people have tried to fuck with the definition to make it so that these ones have to be a little clear. It's never been clear to me that that's better or worse. It's always just been different. I think you could maybe improve the win rate on the hammers and shooting stars by changing the requirements. I think you could probably improve it a little bit, but I've never done the testing, to be honest. So
Okay. So you recommend just following what it's being told to follow at the moment?
Well, I like having black and white rules, and if you look at how often we get hammers and shooting stars, like so let's look lately. Out of all these trades, 1, 2, 3, out of 20, 23, 3 out of 23. That's about what it is. Let's pick another random bit. 1, 2 out of 23 or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these cluster. So you don't get very many of them, but when you do get them, look at what happens. So when we get 4 in a row, when we get 4 in a day, generally they're a pretty good edge. So when they start to cluster, you actually want to take more of them. So most of the time, it's not going to be enough to make a difference. But here you can see in this couple of day stretch, it took 2 here for 2.1R, another one for another 1R, another couple for another 2.5R. That's like 6 winners in a row. And then we've got 2 winners and 2 losers down here. So when you get a lot of them, you probably want to you probably don't mind if the definition's a bit slack, because they're probably going to work. So what makes these work is not the shape of the candle. What makes these work is that the market is trending. And most of what makes these patterns work, you watch these patterns for a while and you think that there's some sort of black magic, but they're not really. Most of the effect comes from actually breaking the candle bar high. So if you look at, a shooting star breaks a candle bar high, you can expect a decent move. But here we've got a hammer that did not break the bar high, and we got no move at all. Here we've got a hammer that broke the bar high, and it got no move at all. And here it didn't break the bar high, and it just went sideways for 4 bars. So really, a lot of it is just breaking the bar high.
All right, perfect. Okay, well, thank you so much. That's awesome.
Cool, man. Nick, welcome to the group and welcome to the call. And yeah, thanks for being here, man. And why don't you tell us where you're at with the system, and then maybe the group can give you some suggestions for what's the next thing to do.
Okay. Hey, Scott, can you guys hear me?
We can.
Hello? Okay, yeah. Hey, guys, my name's Nick. Yeah, so I just started learning the system. Signed up about a month ago, but I caught dengue fever. And so I had to take a break for a while. So in terms of where I'm at the system, I'm still trying to just learning and implementing the rules, going over the past trading spreadsheets.
So okay, so the system is 3 categories really. If you're going to learn it in 3 goes. So the first thing to learn is the mean reversion setups, like going short here, Once you can do that, then you want to add in decreasing volatility and skip the short setups when you're in decreasing volatility. That's the next stage. Once you can do that, then you want to add in the hammers and shooting stars. So where are you at?
Yeah. I'm at the decreasing volatility stage right now.
Okay. So
Yeah.
that seems to be, for most of us, that's the most difficult part. So you probably have questions.
Yeah, I do.
Okay. Let's go.
Okay. Let me see. I actually still have some questions regarding the mean reversion
Sure.
system. Yeah. Okay. So when the 5 and 10 minute chart is trending and on a Bollinger Walk, and do we still take the mean reversion trade on the 2 minute if it makes a Bollinger touch?
Yes, we do. Because okay, so let's say here we're Bollinger walking up, right? So this is long confirming evidence, but at the same time, it's short confirming evidence because it's a Bollinger touch. So here we have both long and short confirming evidence. So if we were in decreasing volatility mode, we take long trades, but we're not in decreasing volatility mode, so we take short trades.
Okay. Yeah. My next follow-up question with that is okay. So say if the price doesn't make a say on a 2 minute chart doesn't make a Bollinger touch, but it forms a hammer candle or shooting star candle at the AEMA, do we take a trend following trade?
Okay, we take a trend following trade only if we're in decreasing volatility mode. What throws us in decreasing volatility mode is first of all us being trending, second of all us having the highest close in the trend so far on a downtick in ATR. And if you look here, highest close in the trend so far on a downtick in ATR. So the way to make this so that you don't miss it is every time you get the highest close in the trend, just say to yourself, oh, highest close in the trend, better check, is it on an uptick or a downtick? You know, highest close in the trend, is it an uptick or a downtick? And sometimes you have to zoom in, like you can double click on these panes and it makes them bigger and you can check.
Yeah.
Okay, and once you're in decreasing volatility, you stay in until you're out. And one of two things pull us out. The first thing is it's breaking a pivot 2 high. So here is a high in ATR with 2 lower bars to the left of it and 2 lower bars to the right of it. So note that this here is not a pivot 2 high, and this is not a pivot 2 high, and this one is. So you can see here, once we went into decreasing volatility mode, this is a pivot 2 high, and we came out here, and then we came back into it here and stayed in it all the way.
Okay.
Okay, so what throws us out of decreasing volatility mode? Breaking a pivot 2 high. Here is another pivot 2 high, but we never broke it. Here is another pivot 2 high, 2 bars to the left of it and 2 bars to the right of it, never broke it. Here is another pivot 2 high.
Okay.
You with me?
Yeah.
Yeah, and this is not a pivot 2 high, this is. So you can see that these stretches of decreasing volatility can go on for a tremendously long time.
Yeah. Okay.
Okay.
Yeah.
So what's the plan for this week?
For this week, I just want to get better baseline, do better, just kind of like hammer out whatever questions I have regarding the system, and then just kind of going back all your past old videos just to kind of like see if I can find answers to them.
Cool.
And then
I would suggest posting questions in the Platinum Facebook group as you get them, so you don't have to wait until the next call, so we can start getting you some instant feedback and get you up to speed.
Okay, yeah, absolutely.
All right, man. And if you get stuck during the week, just book a call. I'll be around almost every afternoon next week. So.
Okay.
Cool.
All right, sounds good.
Hey, Scott, I wanted to ask a question about the DV that you just shown. Is
Sure.
Are we agree that when the trend is over, the DV mode is over?
No. Okay, that's a very good question. So what Thomas is saying is we're trending up here, we stop trending right here, right?
Yeah.
Once decreasing volatility mode requires trending to turn on, but it does not require trending to be on all the time to continue. So once it's on, and it's on until it's off. Now, if we can flip decreasing volatility from long to short. So now we're not taking short trades. It's possible to flip so we're not taking long trades. But what is this? The 9th of September 23:32. Let me bring up. So you can see the September 23:26.
I think you left the date as the 10th. If the 2 minutes the 9th, I think you're on the 10th on the other two charts.
Sorry. My bad. Okay. So we ignore decreasing volatility down if we're trending up on the 5 and the 10. And you can see here, we're clearly trending up on the 5, clearly trending up in the 10 until about 15 past the hour. So until about here. So if we get the lowest close in the trend and we're not trending up on the 5 or the 10, then we can flip from decreasing volatility long, where we stop taking short trades, to decreasing volatility short, where we stop taking long trades. That is not the case here, but it's possible, and you have to check. So this is a tricky situation. Clear, Tom?
Not sure.
Yeah, okay, let's do it again. So once decreasing volatility is on, you don't have to keep checking if trending is on. And the reason for that is simple, because if you imagine how much more complicated the system would be to execute if every single bar you had to check if you're still trending. It would just be a nightmare of complexity, like every single bar you have to check. And that would drive you crazy. So it's just not practical to put that sort of cognitive load on yourself.
Yeah.
How was your week?
Just I think from that is the part where you said that we switch from long to short marketing. I didn't.
Okay,
Yeah.
so it's very uncommon. In fact, it's almost impossible for it to happen, because almost by definition, when you're decreasing volatility up, you're probably going to be trending up on the 5 and trending up on the 10. So in that situation, remember, while we're trending up on the 5 and trending up on the 10, we cannot go into decreasing volatility on the decreasing volatility down. We just ignore it. So it's an extremely rare situation. It's something that you might see once every couple of months. So if you can understand it completely, it wouldn't be the end of the world. But when can we go into decreasing volatility down? When we stop trending up on the 5 or stop trending up on the 10, and you can see the exact moment we stop trending up is when we touch the lower Bollinger, or when we get a close above, close below, close above, close below, which is the same thing.
Yeah, probably I didn't notice until now, because for me, once the trend was over, I was over on the DV mode. So
Okay. Yeah, no, it's the important thing about DV is that what it tells us is that a trend could go for a long time, and you can see it's you really don't want to be going counter trend during these things. They can go for a while, and
yes.
you can see counter trend is a particularly good bet until you get a volatility spike, and then it becomes a good bet again.
So Scott, where you were in that bit of price action there near midnight, I think it was.
Yep.
There's a hammer there just before midnight.
This one?
Yep. So we're still.
Okay.
You can still take that long?
Um,
that hammer just by itself. So if you're still in DV, even though it's touched the lower Bollinger, you're not trending, but you're still in decreasing vola, and you've still got long confirming evidence on the other two timeframes.
You would
It's a valid
accept
hammer, is it?
You would accept you are, or it's a valid hammer. It's a shitty hammer because it's an artifact of the rules. But in this situation, you're already long from touch of the Bollinger, higher close, lower close. So you're already long for retest variation.
Yep.
But technically, yes. And yes, that's a shitty nonsensical trade that doesn't make any sense at all. But it happens,
I mean, it just happened in that little patch there. But
it happens
so for me, I think
so-
I'm a little bit like Thomas in that as soon as it touches the lower Bollinger, I'm like, oh, okay, I'm not looking for shooting stars or hammers anymore. But
I'm a bit the same. And
really, that
if
it's
you miss
still,
this, that's not the end. That's not
Yeah.
the end of the world. And it's a nonsensical trade. And we could consider putting another rule in to take him out. But how often has this happened?
yeah, no.
It's like if
Not
we
very
start
often.
putting extra rules in, to me it's better to accept a bad trade every now and again than to have a bunch of rules.
Yep.
And to be honest, most of us are going to miss this in real time. I probably would have missed that.
Sorry, Thomas.
No problem. So my week is going to be short because you know about this thing of fees that we talked about at the beginning of the week. Basically, it throw off me I wasn't clear about anything because then I called Royal Time to change the fees. He told me that it will take a few days to get changed. And also I had a very, very busy week at my job. So I decided, no, I'm not going to trade this week. All the component to make mistake was there. So, and also I was a bit tired. So I decided not to trade.
It's nice to take regular weeks off, man. Don't ever beat yourself up about that. If you're feeling like you want a week off, you probably do. And that's just the truth of it.
I think that was a good idea because I wasn't absolutely ready for trading at all. So it's
and
better.
you feel better about it this week?
What do you mean?
Feel better about it for next week? Like a week off was enough?
We'll see after the weekend, maybe.
Okay. I'm starting to feel good about it again. So I'm starting to feel like optimistic for the coming week. Tuesday I was trading like shit.
And because I didn't trade this week, I don't know was the system performing well this week? Or?
I only traded Tuesday and Friday, so I don't know. I had 2 wins and 1 loss on Friday, and we had a couple of wins on Tuesday, but I haven't done the full baseline yet. So that's my thing to do for today.
Okay. And Anthony, maybe you had traded all this week?
For a fair chunk of it, yeah. I think Tuesday, Wednesday were quite good days, and then Thursday, Friday it tapered off a little bit. But I think overall for the week it'll be. I'll be surprised if the baseline doesn't show it's around about 4R for the week, assuming you took every trade. So I think we're in a bit of a choppy sort of area in the market. But you look at the Nasdaq and what it's done over the last couple of weeks, and things have changed a little bit.
Talking about the Nasdaq, that was a bad miss. This is a textbook buy setup by any measure.
You're not showing your screen.
Drop, no retest, and we got no buying pressure here.
We can't see your screen, mate.
Oh, sorry. Let me do that again. So, no retest, very strong bull market. You would expect buyers to jump in here. We've got signs that dip buyers are jumping in, higher close, lower close, even lower retest of the low. There should be buyers jumping in, but look how weak this range is, even smaller than this range and even smaller than this range. So going weak on the upside, very stinky price action. That shouldn't be happening. It should be rocketing to fresh highs here, and then overnight, a close below the previous lows. That's a very, very bad fail. So what that tells us is that all the people who wanted to get long FOMO'd in here and there's no more dip buyers. That's looking very ominous to me.
And the ranges are noticeably different.
Notice, and you can, which is an excellent point. Look at this, just at a glance, this looks steady and smooth, and this looks like this is a totally different market. This is not your daddy's market, right?
Yep.
This starts to look a bit more like this, right? Which we
Yeah,
haven't
exactly.
had for long. Yeah, it doesn't look good to me. But one thing to keep in mind is that in this period, we had some of our best results ever. So we'll see.
And so
All right.
to finish, so you asked me if I feel better. I mean, this week was very busy on other stuff, so I didn't really rest. So we'll see next week how I feel.
Okay, so I'll be trading on Monday. Why don't we just connect a bit before Monday trading and see how you feel, and you know, if you want to do it live with me, I'll be there live, so we can do that.
Okay, great.
Cool. Same link as this. I'll just leave the Zoom on Monday and we can do it together.
Great. Thanks.
All right. That's everything, Thomas.
Actually, I'm wondering if at some point I wanted to test a new setup like the one you were talking about when you are touching the EMAs and yes, actually
Okay.
the mirror version, but from the EMAs. And,
Okay, so for the guys who don't understand, this is a proposed setup that I've used in another system before, which we have a suspicion might be better than hammers and shooting stars. The rules of the setup are when you get a pullback that goes past the EMAs, consider this like a Bollinger touch, and then higher close, lower close, long here, stop loss here. You can see it here. You can see it here. Significant low, higher close, lower close with a wide range, long here, stop loss here. They still work when they're wide range. So, sorry, continue, Thomas.
Yeah, I just wondered what will be the process to actually test this properly, and if you
Okay,
can.
so in my opinion, there's two. Sorry, there's two separate. There's two separate types of setups, and this neatly illustrates it. These small range ones behave totally differently than these wide range ones where you've got long here, stop loss here. These long range ones, I did a lot of testing on the 4-hour charts, and 1.2R was the optimum target, and they very rarely got to 2, but they had a 70% chance of getting to 1.2R. These ones were only a 60% win rate, but they had bigger winners. So what's the process of starting to test that? Probably adding another tab to the baseline sheet and checking those off and checking what maximum favorable excursion they made. I think that they may actually be better than the hammers and shooting stars we're trading now. The advantage is you probably don't need to do decreasing volatility to have them, because they're not particularly dependent on that decreasing volatility. If we find a section of price action that's not decreasing volatility, that is decreasing volatility, like here, higher close, lower close, long here, stop loss here. Yeah, this one touches the lower Bollinger, but they're like a lower Bollinger touch in a trend, but when the trend is so strong that it's not going to get to the lower Bollinger. So conceptually, I think they're going to behave like Bollinger trending confirmation, I think.
Okay.
If you want to start testing that, I can give you added access to the baseline, and or you can put it on your sheet, and we can have a look at it. That would be I would have thought that would be a very interesting exercise.
Okay. Actually, I was thinking about starting, because I'm coding the system on my own. I wanted to implement some testing part in the system. So testing
from an automated perspective, I would have thought those would be better than the hammers and shooting stars, just from a consistency point of view, because the ranges are going to be better. So on most markets, the smaller the range, the lower the edge.
Okay.
But, you know, for example, here, long here, stop loss here, that's not a really small range. It's not a big range, but it's not a small range either. It's like just right. But a hammer candle, like can be a really small range. It can be a minimum viable arch rate, and we know those have a lesser edge.
Okay, thanks.
Give me 1 second. I'm just going to go to the bathroom. We'll be back in a minute, guys. All right. Sorry about that. Is that everything?
Yes.
Cool. Thanks, Thomas. Anthony, you want to go next, man?
Yeah, sure.
How are you?
Yeah, good, mate. Good. Interesting week. So still trading.
Again.
Yes, indeed.
Oh,
Yep. 15 trades, 8 profits, 7 losses. So 1.89 for the week.
So scratch week after, more or less after comms.
Yeah, that's right. And, you know, last week was a negative 1.5. So it's kind of one's sort of cancelling out the other. But anyway.
Yep.
I am keeping the baseline on both the 6E and the Euro USD, and I review them both the next day just to make sure I didn't miss anything, see how my performance is going, that sort of thing. Any trades that I'm not taking that I should have.
I'm very interested to see how the two compare up.
Yeah, I've forged into it wanting 6E to stand on its own, and I'm fine. And then I was because of the half tick nature. And you get a lot of equal highs, equal lows, equal closes. I was hoping I'd come up with a bit of a hybrid or a rule set that would say if I get an equal close during a formation and it's on a down tick, then I'm in decreasing vola. And I was using FXCM as a bit of the tiebreaker. And I've got to the end of the week and I've reached the conclusion from as much as I've been trying to fight for it to stand on its own, I've got to listen to what you've said in the past, what Chris W said on Tuesday, and even a bit of a chat I had with Chris Borlase during the week as well. And I think, and I've had a good look at it Thursday, Friday, I think I'm going to revert to using FXCM as the judge and jury, and then keep placing my trades on 6E.
That's what I would recommend. That's what I would recommend, and that's what I mean. I only traded it for like 100 trades when I traded it, but I really, really enjoyed it, and I did it that way in the end. I tried both ways, and I find
it's mainly decreasing vola that you know, there'll be times where 6E will come out of decreasing vola just enough, you know, like it'll beat the previous pivot too high, and you'll go, well, I'm not in DV anymore, but FXCM still is in DV, and you look at the price behavior and you go, you still are in decreasing vola, you know.
Right? So what you do is you're not even really looking at 6E dated bar to bar, but when a setup is forming, then you have a 6E chart open and you go to that and say, okay, it's 6 ticks and
just to calculate your position size.
And you can do that in your head now, right?
Absolutely, yeah, and that's what I'm finding. You know, I'm like, oh shit, there's this one saying that and that one's saying that, and you talk yourself out of a trade. And
one of the very strongest edges in short-term price action is when the euro makes a new high and the 6E does not make a new high. That's a very strong that's a very strong non-confirmation that the market's about to reverse. So if you think about it, we're looking at taking reversal setups. Mostly we're doing 75% reversal setups, and those reversal setups are better when things get confusing between the 6E and the Euro USD, right?
Right.
So you're tempted to talk yourself out of a trade at the exact time when we've got evidence that that's the best trade.
Yeah.
So I think that conceptually, I think that's what's happening there.
I think you know what Chris said on Tuesday really resonated. He said he was trying to do the two between whatever his platform or his broker was compared with FXCM and trying to blend the two. And when he said, you know, as soon as he just decided, nah, I'm going to use FXCM as the judge and the jury, that's what we're all doing. He's never looked back. And I thought, you know what, that's pretty sage advice.
That's my experience too. And I traded the other way with IB, and you know, it's technically more correct to do it the other way. Like, let's be honest, it's actually better to trade off the data you're given. Like, that, it makes more logical sense. But this is really quite a difficult system to execute, and anything that makes it easier is worth whatever that costs, whatever you have to pay to make it easier. And you know what I mean?
Yeah, absolutely. I don't have any rules-based questions or anything like that for you today. I've got a couple of psychological ones, though, if I can pick
Please.
your brain. I've noticed I have, on reflection, I just have a little barrier with entries that are close to the ADMA. I'm always sitting there going, oh, you know, gee, it's already hitting the ADMA, and I reckon I can get a better entry. And even though it'll meet the rules, you know, I'll just hold off for that better entry, which doesn't come, and then it runs to profit, and then I've got the shits.
Okay, so when you get weird stuff like this of not wanting to enter the rules, and like logically that doesn't make any sense, right? Like you're,
I look at it the next day and I go, "What were you thinking?" Like,
okay, so that what you just said there is the key characteristic of you abandoning yourself. So what it feels like. So the dynamic behind what's happening here is that trading is hard and it brings up strong feelings. Your subconscious can't really tell the difference between being frightened that a $100 R trade is losing and you being chased by a fucking saber-toothed tiger across the savannah. To your subconscious, it's all the same thing. It spikes all your lizard brain stuff. Your amygdala's going crazy. You're being flooded with dopamine and trying to figure out what the fuck's going on. And it's incredibly confusing once you get all those stress hormones and amygdala sensitivity stuff happening. So when we don't like to deal with that feeling, when we've decided that feeling is hard, a lot of the time our subconscious can just hijack our reality. And so what happens is exactly the same thing that you might have experienced. Let's say you're on a diet and you're really happy with your diet, you're losing weight, and then all of a sudden you like walk past a donut shop and you think, oh fuck, I deserve a donut. Like, and then you have one bite of the donut and then you're like, fuck, donuts are good. Like, let's eat 5 of them. And then you don't stop just because you're full. You stop when you hate yourself. And then you look back later and go, I was on a diet. Why did I eat 7 donuts? And why am I, you know, why do I feel disgusted with myself? And it's baffling. So the key characteristic of when you're not even there is that baffling nature of it. So anytime that you look back and you go, what the fuck was I thinking? I don't trade like that. You know that you weren't even there. So at that point, you know that the root cause of things isn't any rules-based thing. It's simply that you were unwilling to face the feelings that were coming up. And so the solution to this is obvious. Once you know that the problem is caused by you not facing the feelings that come up while trading, the solution is to face those feelings. So there's a number of ways to do this, like any of the mindfulness meditations work. But the one that works for me is when I'm thinking about placing a trade and I feel like something going on in my body, like a tightness in the chest or some sort of anxiety. There's two ways that I personally use. Way one is I just rate it from 0 to 5. How strong is my anxiety? And I'll go, okay, anxiety 3 out of 5. And then check again 5 seconds later. Okay, anxiety 2 out of 5. Anxiety 4 out of 5. And while you're actually checking on your anxiety and your stress levels, it's really difficult to like lose control of yourself or just clock off mentally. And the other way that I've used before in the past, which is Van Tharp's way, is to pay really attention to the physical manifestation of the feelings that are coming out. So most of the time, fear and anxiety is manifested as a tightness in the chest. And you say, okay, where is it? Is it in the upper chest? Is it in the lower chest? Like, and then you go in detail with it and say, okay, is it like a clear boundary between tight and not tight, or is it like a fuzzy boundary? Is it on the surface of my skin, or is it inside? And then you just pay really close attention to it, and that act of paying close attention to it desensitizes you from it. And what you're going to find is you don't clock off. So what you've got going on here is a very common thing, is where you're unwilling to face the feelings that trading is going to bring up. So you're afraid of losing a trade. And
look, I'm somewhat of a perfectionist too, which is a strength and a weakness at times, you know, and trading can sort of, it's not a perfectionist game, you know, and I need mechanisms to just remind me of that or temper me from that.
So at its root cause is, I think you're treating this too much like a robotic exercise. Mm-hmm. What I think is going to solve this problem is give yourself permission to feel. You know, you're not just a trading robot. If you hate this trade, you're still going to take it. Just allow yourself to say, I hate this trade. Fuck this trade. This is going to be a loser. And I was right. It was a loser. Or I was wrong. Just say it. You know, I don't want to take this trade. I will, because it fits the rules, but I don't want to take it. This is a shitty trade. Mm-hmm. I like this one. I want this one to work. Oh, fuck, it didn't work. Now I'm disappointed. Because that's how it happens, right? Like, you see one that you really like, and you go, fuck yeah, I'm on this one. And then it doesn't work, and you're like, oh, fuck. Shows how much I know. Like, I suck at this. You don't suck. Like, it has nothing to do with you, but it feels like you suck, right?
Yeah, I think last Friday I had I had 2 losers in a row. So it was the higher time frames were in an uptrend. The first setup was on the lower Bollingers. So you're like, beauty, this is a retest variation in concert with the higher time frame trends. I want this, you know. Beautiful setup, took it, rolled over. The next setup, it was
classic,
pretty much the same thing. It was identical, but by this stage, the 5 had touched the lower Bollinger, but the 10 was still uptrending. Still a good setup. Yep. Loser. Okay, 10 minutes later, there was another setup, the exact same setup. Didn't take it. Guess what happened?
Oh. Okay, so this is a classic example of if you have feelings that you don't like, and that feeling was probably of unfairness, right? If you don't express those feelings or are unwilling to feel those feelings, your subconscious can and will hijack your reality and just take you out of the equation. You won't even be there. So that decision to skip that other trade was not you. It was made by a part of you that's like 5 years old. It's a kid, right? Like, it's selfish and just wants to feel good all the time and eat ice cream all the time and never eat broccoli. Like, that's the nature of it. And so it's your job to feel these feelings. But if you don't feel the feelings, you're sure as anything, your subconscious will hijack you. And this is how we break diets. This is how we do all kinds of stuff that we swore we weren't going to do. I swore I was going to go to the gym today and you didn't, you fat bastard. You know, that kind of stuff.
Mm. That's good stuff. I appreciate it.
And it's never in, the other thing is, it's never in just one area of your life. There's never just one cockroach. It can happen that you're ignoring something that's going on in your other life. And it bleeds over into your trading, which is something that you really have to guard against.
That's good. It's good to talk about it. I appreciate it.
Yeah, just look, the first step to fixing any problem is just awareness of the problem. That's 80% of what's going on there. Just by having this conversation, you know, next time it happens, you're going to be like, oh yeah, I don't want to get my subconscious hijacked. I'm going to express my feelings and still take the trade and say, I hope it doesn't work. I hope it does work. Or, you know, it's okay to feel like you want your trades to work. That doesn't make you a bad trader. That just makes you human.
Yep. Cool.
Cool.
All right. Thank you, mate.
You're welcome. John, are you on the call? John Garcia. He leaves it to record. Julian.
Hi, Scott.
How are you, mate?
Well, I was just thinking about what Anthony was saying, and it's when I get frustrated, then I start doing stupid shit. So I know exactly what he means, and what you said is really helpful. I have a couple of questions on DV, if I may, because there's something I don't quite understand about it, and it's really when it goes in and comes out again. So, for example, on the 14th at 3:36.
So the first thing to understand about DV is you check it the time you check is when you have the highest close in the trend. So here is the highest close. Here's the first close in the trend, and also the highest close in the trend. We've done it on an uptick. We're not in DV. This is the benchmark close. So this is the close is 543. This is the next highest close in the trend. We need to check. Okay, was it on an uptick or a downtick? On an uptick, we're not in DV. Here's the next highest close in the trend. Did we do it on a downtick or an uptick? Now we did it on a downtick. So we're in DV. Now at this point, what throws us out of DV? What throws us out of DV is one of two things. Highest ATR value in the trend, so we need to check it, which was here. The second thing is a pivot too high. Now at this point, this is only one bar away, so it can't be a pivot too high. But at this bar, this becomes a pivot too high. It's never hit, but this bar is the bar that takes us out. And you can see that we've made lower pivot too highs all the way. So we're in
go in at 328, and is it out again at 336?
No, because if we look closely, and sometimes you have to zoom in, this peak is lower than this peak. If this peak broke this bar, we'd be good. And this is one of those situations where you have to zoom in.
Right, and I've got another one, and that is on the 11th at 4:52.
There we go. Okay, so let's start from the beginning of the trend. Touch the upper Bollinger, single bar candle with a higher high and a higher close. So we're uptrending from here. We've got the highest close in the trend and the first close in the trend. It's on an uptick. We're not in DV. The close here is 559. The close here is 562. So we've got the highest close in the trend. Is it on a downtick? Yes, it is. We're in decreasing volatility. What throws us out of decreasing volatility? The highest ATR value in the trend, which is here.
Right. So at 446 then. So at 446, we are still in. We don't go out at 446.
We go out at 446 if it breaks here, but it has not broken here. Now,
right,
if this
that's it.
2 bars to the left of it, is this a pivot too high? It is a pivot too high. So from 2 bars after here, here is the new thing that gets us out. So we're out of decreasing volume.
Right, that clears it up for me, Scott. Thank you very much.
Cool, you're welcome. Anything else for today?
No, well, one other thing is that I've decided I am going to go back to paper trading in TradingView, because I was having so many problems with City Index that it's actually deflecting me, and therefore some of my mistakes are as a result of my attention being taken by that, really. So I'm going to go back, make sure I can get my mistake rate down in TradingView before I look at anything else.
Are you using macros in CityView? So fixed preset orders?
No.
Okay, that's total game changer. I don't think I could, personally, I couldn't execute this system without having preset orders. So I have a bunch of orders, 3 pip stop, 3.5 pip target, 4 pip stop, 4.5 pip target, 5 pip stop, 5.5 pip target. And if you look at your trading platform, there'll be a way to execute those as macros or hotkeys or whatever they call them. And you know, it's much easier when you have it all preset for you at a button rather than, okay, I have to open up the thing and put it all in. And that really becomes very difficult under time pressure. You have to be much better.
Yeah, I'm actually not finding the only time I do find it is basically on shooting stars and hammers. But what's really caused me a problem is the information dropping out of the order panel. It seems to be a bit less, but that was one problem. And another one is that the difference in the information between TradingView and you know, you look at TradingView, it would be a win in my platform. Not a win. It doesn't get that far, and so it's causing me a degree of frustration. I was looking at it today as well. TradingView hit the top Bollinger. Looked at my platform, nowhere near the top Bollinger. I'm thinking, how can that be the case? So I checked it. I refreshed it, and then sure enough, it hit the top Bollinger. So I'm thinking, but this is just distracting me from.
There's probably technical reasons for that. Like you might be plotting at the bid or the ask instead of the midpoint or something like that.
I have made that mistake before, but not on this occasion. It was on the mid price. I did check that, and still, it's just I don't know. It glitches a bit, and that just causes me. It distracts me really from basically trading the system, and I'm not good enough at trading the system yet. So that's really where I'm going to concentrate my effort.
I agree with concentrating on getting the system right. But what most of the guys are doing now is they only look at TradingView and they switch over to City Index or whatever their broker is just to place the order. And so we're not looking at the exact same prices. We're looking at saying, okay, we've got 3 bars here and 3 bars on City Index, and you know, like let's find a trade. So let's say we're going short here. We'd say, okay, we've got these. What was the high of this equivalent bar on City Index? What was the low of this equivalent bar on City Index? And taking it like that. So you're really doing all your calculations off here and then just moving over to City Index and entering it. And what I personally do is I don't personally check for discrepancies between it. I'll just say, you know, the very rare occasions that this one's 4 pips and it's 4.5 on IB, I'll say fuck it and notice it afterwards and then just drag the thing up and down.
Right. Okay. Yeah, that's good advice.
I like to prioritize getting the system right.
Yeah. I think I just need to be comfortable with the system. If I can trade without 20 trades without making a mistake, I would be over the moon right at the moment, but there's always something.
Okay. Yeah. No, it has to be 20 trades. Otherwise we're nowhere. So that's you're absolutely right. That's the number one priority. And yeah.
Right. All right. Thank you, Scott.
All right. Stephen, are you there, man?
I am here, Scott. Yes. Thank you.
Excellent. How was your week?
Didn't really trade this week, Scott. As you know, I only joined the Platinum Group yesterday.
Okay.
Only traded on Tuesday. It was pretty mediocre. 2 winners, 2 losers. I'm really focusing. Well, the reason I joined the Platinum Group, as sort of discussed yesterday, was I just want to focus on not making mistakes and getting, you know, to a point where I can go to a live account. So I'm trading on a demo account.
The first thing that's going to reduce your mistake rate out of sight for a start is just tracking your mistakes. So most of us make a lot of mistakes until we start putting them on paper. And once you start plotting them, for example, Thomas had like 5 mistakes one week, 3 mistakes the next, 2 mistakes the next, 1 mistake, and then he went a couple of weeks with no mistakes. It was just a very clear progression down just from paying attention to it. So I think you're going to experience the same thing. The second thing that we're going to look at is every mistake that you make. I want you and I to go through on these calls and really go through in detail. So you never want to let a mistake go past and just go, oh fuck, I fucked up. Oh well, I'll try better next time, because that doesn't work. What you want to do is say, okay, I made a mistake. What was the cause of that mistake? And oftentimes what we think is the cause of our mistake is not the cause of our mistake. So you want to the way to do it is to keep asking why. So for example, if I made, I had a whole category of mistakes where I would make a mistake in the first 10 minutes of the trading day and my head wasn't in the game. And I'd be like, why did I make this mistake? Oh, I didn't notice this. And then, but that's not the real cause. I go, okay, why didn't I notice that? I didn't notice that because I was confused about this. Why was I confused about this? I was confused about this because my head wasn't in the game. Why wasn't my head in the game? Because I just sat down just when I was supposed to be ready to trade, and I didn't know if the market was trending, and I had all this extra stuff to do, and then I started making mistakes. So the solution was, to start 10 minutes earlier. So what we want to do is start grouping our mistakes in buckets. And the three big categories of mistakes that nearly everyone makes: firstly, mistakes of fatigue, mistakes that are like, I used up all my concentration and my concentration's gone, and then I started making mistakes. The second category is mistakes of enthusiasm. So for example, you see a setup start to form and you want it to happen. You go, okay, I've been waiting 2 hours for a setup. I want this one to be, I want it to work. And then you don't notice that it's flipping into decreasing volatility because you just wanted to take a trade and you just blocked out that. That's another category. A third category might be mistakes of not having your head in the game at the start of the day. And there's probably another couple of categories for you as well. But for me, 80% of it was in those three buckets. So once you start identifying the buckets of mistakes, they sort of take care of themselves.
Okay, thanks for that.
Okay, so next week, I think we should report on all the mistakes that you made and really go deep with them. So is there any that you have for this week that you want to go through?
The one mistake I keep making is in decreasing volatility. I see a hammer or star setting up, but what I miss is it actually didn't touch the EMA. Okay. I take it and then kick myself.
Okay, so this is a category of mistakes like I was talking about. So you see something setting up and you kind of like, okay, I've been waiting hours for a trade, and like this is the perfect example, right? I've been waiting hours for a trade. There's finally a trade. Fuck yeah, I'm on. Let's go. Let's get it set up. And you don't do a final check.
Okay.
And so here the EMA was 314 and the low was 316, and you just assume because you're all excited. So the real cause of it is wanting a trade to be on. Why did I want a trade to be on? Because I want some action, because I want to make some money, because I want to feel like a good trader. This is a mistake that's caused by wanting to feel something. And the markets are a very bad place to get you thrills. Like, ideally, this should be pretty boring. Ideally. So you can fix this problem with a checklist. And the checklist is, did it touch the EMA? Am I still in decreasing volatility? Do I have 5 minute and do I have 10 minute? Those four things, and you're not gonna want to do that. Like, I don't want to, because I feel like a beginner when I tick off a checklist. Like, I feel like an idiot. Like aren't you better than that? Like, do you still have to do this training wheels bullshit? But that training wheels bullshit just keeps everything smooth, man.
Yep. No, I keep trying to do it in my head.
Yeah. And why do we try and keep doing stuff in our head? Because it makes us feel smart. Everyone likes feeling smart, right? Yep. Everyone likes feeling clever. Everyone likes feeling like, if you do the stuff in your head, then when the trade is a winner, you can take credit for it. If you do it on a checklist, the trade, when it works, doesn't actually feel very good anymore. It just feels very like someone else did it. So you don't get to take any credit for the wins. And a big part of what goes on with your subconscious while we're trading is it's no different than social media or anything where you get a hit of dopamine. Your brain likes that hit of dopamine for a winning trade, and it starts to want it. Like, I want a hit of dopamine. Like, give me that dopamine.
All right. So I'll keep tracking my trades during the week and talk about mistakes next week.
Okay. So for hammers and shooting stars, a very simple checklist.
Yep.
Easy.
I'll put one together.
Awesome, guys. I don't think we've missed anyone. That's everyone, right? I think it is. Great week, guys. Feels like it feels like the drawdown period is tentatively ending, and I'm expecting a great week next week. So I'm going to be trading as much as I can. So yeah, feel free to check in on this room during the week. While I'm trading, I'll try and leave the room on, or if you're trading, shoot me an email and I'll turn it on while we're all trading. And yeah, have a great week,
Brilliant.
guys.
Thank you very much, Scott.
Sounds
Cheers,
good.
everybody.
Thanks, Scott.
Thank you.
Thank you.
Bye.
You're welcome, guys. Have a great weekend.